Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. It's Tuesday, the 10th of January, and we have Jessica Amir, market strategist at Saxo Capital Markets, coming in from Sydney. Jessica, as always, great to have you on the show for the first time this year.
Great to see you. Happy New Year.
Happy New Year. Now, before we get your insights, Jessica, we're going to come back, but I'm going to look at the numbers first. Bitcoin is at 17,215. It's down 0.06%. Ethereum is at 1,326. It's down. It's up 1.19%. Now, looking across the regional equity markets, we start with Singapore. That's down 0.87%. Bursa Malaysia and KL is down 0.57%. Shanghai is down 0.15%. The ASX All Ordinaries is down 0.32%. The Nikkei bucks the trend. It's up 0.65%. The Hang Seng is down 0.48%. And rounding up the numbers, we've got the Kospi, which is down 0.17%. Jessica, your thoughts on market performance in the first half of the day across the region?
Well, I guess there's a lot on the line. We've got the all-important US CPI report out on Friday. So we're seeing a bit of profits taken off the table in case the numbers go in the direction that investors don't want. But importantly, why are markets seeing a bit of a sea of red today? I guess you could use a turn of phrase. And that's simply because we had markets getting a reminder from two Fed speakers overnight that US interest rates will probably be topping over 5% at the end of this year. It's not necessarily good news for tech stocks or indeed growth stocks. So a bit of a reminder that that growth could be capped this year.
Now, Jess, I want to put the microscope on China because the spotlight really is on China and the reopening story. But for a start, what are the roadblocks internally ahead for China as it opens up the market?
Yeah, that's a really good question. Well, so far, we know that COVID-0 has been front and center. However, over the past, 1.5 months, we've started to see China really wave a flag saying they're going to potentially ease restrictions in March. And then this week, they came out actually easing restrictions sooner than expected. And then today we heard from a secretary at the PBOC saying that growth in 2023 should be normal. And that is provided that we do see some stimulus from Beijing. So I guess going back to your specific question, what are the roadblocks that we need? Well, we need to see more fiscal support, but the market is telling us that we'll probably see fiscal support. And that's why we're seeing commodity prices hit new highs today. So we're waiting for a smooth reopening and I guess the numbers hitting the road. So we are looking at traffic numbers, airline traffic numbers as well, and also property. So last year we did see property sales contracts actually decline. So property development sales actually went into the red last year. And now we're seeing early signs that momentum is picking up and sales are returning. So we are getting lots of good news. We just need this to continue.
Now, one of the things that you highlighted in your daily report today was the fact that there could be issues around power supplies as basically China opens up. How is that going to impact this reopening story and specific stocks that it could impact?
Well, it's a bit of a red rag, right? So China basically came out, specifically China's NDRC and their National Development Reform Commission, and they basically issued 3 notices urging parties to come out and secure long-term and medium supply contracts because they basically said in black and white that China could potentially run out of power again. So this actually is a huge flag. So it means that a lot of those consumer-facing stocks, particularly those tech stocks, and of course those infrastructure and property names, what is going to happen if there's a blackout? Well, we do know that they've got backup generators, but we are likely seeing many foreigners now tapped. We are seeing that an Australian company, BHP, actually sent 2 cargoes of coal shipments to China. Now, this basically is a huge move. It basically means that China and Australian industrial or China relations are improving. You have to remember, Brian, we don't have to go too far. Just 2 years ago, Australia was sending coal to China. But over the past 2 years, there's been a ban on exports from imports from China being banned. But now China's pretty desperate for energy, and they're tapping on Australia's shoulders. They could potentially tap on Indonesia's next. So companies in the coal space that we're potentially looking at are Coronado. They do have contracts with Asia. Also Whitehaven Coal, as well as BHP as well. And there's a few other names as well, but they're just some examples.
Jess, one of the key things that the Asia Pacific economies are looking for is China really as the growth panacea, not just Asia Pacific, specifically Australia, for example. Goldman Sachs has come out today and said that China's reopening would boost Australia's economy by as much as 1% in terms of GDP growth this year. What are your thoughts on this? These assumptions that Asia is just going to buck this whole global recession and ride the China wave?
Yeah, so great question. So in our research note yesterday, we actually noticed that there could potentially be a 1% increase in GDP by the mere fact that we are likely to see Chinese tourists return to Australia over the next 2 years. And then on top of that, we've got, I guess, the hot sauce, I guess that you could call it, and that is commodity demand is going to add an additional layer of GDP growth for the Australian economy. And then, of course, the extra layer, extra hot and spicy hot sauce is probably going to come from coal. So for the past 2 years, we haven't been exporting any coal to Asia, and now coal exports are being sent out, I guess, at a rate of knots. The first shipment in 2 years leaving Australia just this week, going to China. So there are a couple of things that I would be watching. Further catalysts, I guess, could be extra tourism, but I think that's pretty much a lot of an extra kick at the moment. And then you've got to think about stocks as well. So we think that the Chinese economy, if you go back and have a look at what happened in 2020, when mainland China eased restrictions after Wuhan, their stock market recovered, but now we're seeing that China has learned from their mistakes and they're in a better position than they were before. So they've got a strong chance of putting COVID behind it this time around. So that means we could see a sustainable recovery ahead.
Jess, as always, great to have you on the show, and thanks for your insights.
Thanks so much, Brian. Have a great afternoon.
We've been speaking with Jessica Amir, market strategist at Saxo Capital Markets, on BizTech's Asian Midday Market Watch, presented by the Smart Investor Singapore. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.